Right now, housing is a tale of two Americas. In the South, prices are collapsing. In the North and Midwest, stability still holds, but as I'm about to show you in this video, cracks are forming. What started as the biggest bubble in US history is now popping, yet up here in the North, buyers and sellers are acting like nothing's happening. I'm sure if you watch real estate videos on YouTube, this is not going to be a surprise, but I don't think anyone really understands just how troubling the situation is in some of these markets and how it's spreading to the rest of the country. Take for example this chart by Nick Gorelli, otherwise known as Reventure Consulting. It shows the number of active listings by region split off by essentially the two portions of America outlined in my thumbnail. Down here in the South, inventory is actually higher than what it was in 2019, and worst of all, it's growing at record pace with no end in sight. From the bottom in 2022 to now in 2025, the number of homes for sale in the South and West has exploded 290%. If you map it out, that's a pace of 31% each year. Meaning that by the summer of 2028, 3 years from now, there will be nearly 2 million homes for sale in this region, which is 10 times the number of homes that were for sale during that 2022 top. Now you might say, well, what's the big deal? And to be fair, inventory doesn't represent prices. It's simply a measure of supply. But like anything in economics, if you flood the market with supply, we know what happens to prices. And it's already happening even with the supply at 824,000. You can see by looking at nearly any market in Texas or Florida that prices are already under serious pressure. Obviously, everyone knows about Austin, where prices have fallen 23% since that infamous peak in 2022, but Florida is also now faltering. There are already a few places in Florida with 15% declines, in particular Cape Coral, which has fallen 17%, and Punta Gorda, which has declined 16% since those 2022 tops. But in a lot of these cases, it's not so much the fact that values are down double digits, it's concerning because of the pace at which this is happening and the environment surrounding it. For example, in Punta Gorda, in just the last year, a typical single-family home has declined 12%. And this is happening in a place where active inventory is exploding way past any levels we have seen since at least 2017. Now, this may sound bad, but it's actually a lot worse than just a simple price stat, and we can visualize this by digging deeper into a single region. Let's use Punta Gorda as a lens into what's happening across much of Florida. Prices here are already down 10%, but that number doesn't even begin to scratch the surface. This isn't a soft correction, it's a true spiral. At the same time, home prices are falling, mortgage rates are hovering around 7%. So even with lower prices, homes are still brutally unaffordable for most buyers. This creates a dead zone in demand. Now zoom out and look at the builders. Margins are getting crushed. Builders are slashing prices just to move inventory, putting even more downward pressure on the resale market. It's not just a competition anymore, it's neighbor against neighbor, builder against homeowner. Inventory is obviously quickly stacking up, not because people are selling, but because they're not. Sellers are frozen, pulling listings and waiting for better conditions that may never come. Then there's the psychological wreckage from 2022. Imagine paying $450,000 for a home 2 years ago and now seeing builders offering nearly the same home for $375,000. That's not just a paper loss, that's a gut punch. People feel trapped, bitter, and desperate, and that desperation is exactly what this market is built on right now. What we're seeing is the early stages of a full-blown unwinding, one that mirrors 2008 not just in numbers but in sentiment, fear, and loss of confidence. The pain is layered, economic, psychological, and structural, and it's not done, not even close. Everyone thinks this is just a southern problem. Oh, it's just Texas, it's just Florida, it's just Phoenix cooling off. That's the line, right? That the downturn is contained, but the data is starting to tell a very different story, and it's creeping into places no one expected. Take Ohio. Not long ago, this was one of the hottest markets in the country. You couldn't walk into an open house without stepping over 3 bidding wars. Homes sold before the weekend even started. Now things are shifting, quietly but fast. I'm not saying saying Ohio is in a freefall like Austin or Punta Gorda, but denial doesn't change the trend. If you peel back the layers, and I mean dig into the Realtor.com dashboards like I have, it gets real. In my own county, active listings are up a modest 10%. Nothing too crazy, but look closer and median listing prices are down 11 of the last 12 months year over year. That hasn't happened in nearly a decade. It's not noise, it's a pattern. Inventory still low by historical standards, but that's not the point. What matters is the direction. For 19 of the last 20 months, inventory has climbed. New listings are stacking up, and that seller's market momentum, it's fading fast. This is how housing corrections unfold. First the noise in the flashy boomtowns, then you start to see hairline fractures in the places nobody thought would crack, and by the time people realize it's not just the South, it's already here. Now keep in mind, this is all happening while the unemployment rate is hovering near all-time lows and the S&P 500 is pushing all-time highs. We're living through two bubbles at once, but only one of them, housing, is showing cracks. On the stock market side, it feels like nothing can stop what may be the largest asset bubble in history from inflating even further. I'm planning to drop a more focused stock market bubble video soon, but here's a grand summary. By every major metric, as of June 2025, this is the biggest stock market bubble ever. The only periods that come remotely close are 1929 and 2000. Take the Buffett indicator, for example. It's approaching 210%, a level never seen before. That's well beyond the dot-com bubble and even the 2021 meme stock mania. Then you've got the Shiller PE ratio, which compares corporate earnings to prices. That's also pushing towards all-time highs. The only times we've ever been close to this were 2000, 2021, and 1929. Each of those times was followed by severe market corrections, if not outright crashes. In 1929, the market didn't just crash, it detonated. The Roaring '20s turned into the Great Depression practically overnight. Then there was 2000, the dot-com era. Companies with no revenues and names ending in .com were getting billion-dollar valuations. People quit their jobs to day trade, and then the bubble popped, the Nasdaq fell over 75%, and some of those companies vanished into thin air. And in 2021, valuations soared again. Tesla, meme stock, SPACs, you name it, the market was high on hype. But just like the others, gravity came calling. What looked unstoppable suddenly started bleeding value day after day. That's the playbook. When valuations break from reality, they don't land softly. They crash headfirst. And here we are again, staring at the same flashing warning lights, pretending this time is different. Now we have the most overvalued stock market in history, unemployment near record lows, and yet cracks are forming in the housing market. Can you imagine the pain if even one of these other economic pillars starts to collapse? The damage wouldn't just be bad, it would be 10 times worse than anyone's pricing in right now. Thank you guys for watching. If you got any value out of this, make sure you hit that like and subscribe button and drop a comment if you're a buyer or seller in any of the markets we covered today.